all of these commodities are now garnering a huge amount of attention, and that pivot, that great rotation, as Kevin and Tavi call it, is here. Okay, we're seeing money starting to come back into this space, into this fund here at Crescat, and we're deploying it. We're doing it very aggressively. Why? Because this is just the beginning. I mean, if anybody thinks that we're well into a bull market in the commodity space, they're absolutely bananas. Okay, this has just begun. It is just starting.
Hey everybody, this is Rob Keynes of goldsilverpros.com. We're recording this on March 31st, 2022, and I'm joined by two returning guests of the program. We have the CEO and Director of Blue Lagoon, Rana Vig, and Dr. Hennigh, who's been on our program a couple of times in the past, who is an economic geologist after obtaining his PhD in geology geochemistry from the Colorado School of Mines. He has 30 years of exploration experience with some major gold mining firms that include Homestake, Newcrest, and Newmont. He also recently founded Novo Resources Corp and serves as chairman. He has some notable project involvements, including First Mining Gold's Spring Pole gold deposit, Kirkland Lake Gold's acquisition of Fosterville, and the Rattlesnake Hills gold deposit in Wyoming. Rana has over 30 years of business experience, during which time he helped to launch 5 businesses. He was involved in businesses such as AT&T, Sprint, TELUS, Envision Financial, and others. Gentlemen, welcome to the program.
Thank you very much. Pleasure to be here.
So we're going to talk about Blue Lagoon and the project that they have. It's very interesting. You guys have had a lot of updates. I think it's been quite some time, Rana, since you guys have been on the program. Before we do that, though, I wanted to talk about the environment around gold and silver, because that's really the all important part of it. Not only are the economics of the project important, but what goes on around the world tends to have a big effect on the gold and silver price. And after all, we're mining gold and silver. So wanted to ask the question, there's been a lot going on with regards to the Fed's action, the central bank here in the US. They want to raise rates and start winding down their balance sheet of treasuries. How overall would that affect the gold market? How would gold react to that?
You want to take a stab at it, Ron, or you want me to take a poke at that one?
No, I think you're best qualified to answer that one.
Oh, look, my view, yeah, the geologist will go first. My view is that the Fed is trapped. I mean, they know it too. They're talking a talk, but if you look here, their actions pretty much spell out what's going to happen. They talked about raising interest rates sharply, aggressively. Well, a 0.25% interest rate increase, and it's done very little to curb inflation. Inflation's still running hot, and quite frankly, I think they feel like they're trapped. They cannot lift interest rates too aggressively, because you can see what happened to the stock market earlier this year. It really did suffer a pretty significant pullback. If they were to raise rates, by 1.5% or 2%, over the next year, I think it would put a lot of brakes on the stock market. But I'm not so sure it's going to have that much impact on inflation, because right now, and what's really profoundly different about inflation this go around, say, than the 1970s, is a lot of this is driven by supply side. Okay, commodities have seen gross undercapitalization in recent years. A lot of pressure in various sectors about being sensitive to environmental concerns and so forth. So in the oil industry, for example, there's a lot of push to move away from oil. Well, guess what? Oil companies aren't going to invest a lot of capital in exploring and developing new reserves if they don't see a future in their industry. Mining, look, there's a lot of talk about using metals, copper and silver and gold and everything, basically everything on the periodic table to help advance the green revolution, if you will. But what the politicians fail to realize is that those come out of the ground. Excuse me, sorry about that. And because they come out of the ground, there's not a lot of alternatives here for us. It's not like they can grow a new crop of copper or something. So, it's going to be very interesting times. Copper companies have not capitalized new mines. Gold companies have not capitalized new mines. Basically, you can look around the world at any commodity, even agricultural commodities, and you're not seeing capitalization go into lumber, crops, and agriculture, anything. So we are in for a very, very interesting time ahead.
And just to add to that, part of your question was, what do you think is going to do to the price of gold? Well, look, I think there's so much focus in the retail market. Everybody's focusing, trying to say, well, when's it going to go over 2,000? That people forget that gold's moved significantly already. When we took over this project 2 years ago, gold was around $1,400. Today we're at $1,900. That's a pretty significant move since the last 2 years. And I think people aren't mindful of that and are get caught in this craziness of when is it going to go higher? When's it going to go higher? Right? It's already gone significantly higher, and it's going to go higher yet, in my opinion.
I agree with you on that. The macroeconomic fundamentals are so strong, and as we've talked about on the program for gold specifically, since 2011, it's formed a cup and handle pattern where you had consolidation up to 2016, and then you had people come into the market, and a large part of who was coming into the market are the central banks. They've added to the reserves over the last 7-8 years, more than almost at any time in history. And they kind of know the deal. With Basel III, gold is a high quality liquid asset. They're going to help recapitalize the central bank system using gold. It's become a big part. So that demand for gold has been very, very strong. And just from a technical charting perspective, it looks like it's in its next, up leg. It's broken that cup and handle pattern to the upside. We hit within a penny of its all-time high a few weeks ago. And I think that's very bullish. I wanted to turn the question and the interview over to the general commodities complex, because a lot of times as gold goes, the commodities complex goes, people start to take a little bit of interest because gold is, the shiny metal, and it attracts people into the sector. We're starting to have a really good bull run, and things like copper, tin, zinc are hitting 10-year and 15-year highs. As a geologist, Dr. Hennigh, what is your opinion of why people are starting to come back into the commodities, and why we're starting to see those commodities start to trend up as they happen?
Well, you can pick just about any element on the periodic table and look at the track record of money that's gone into looking for new resources of that metal. And we've done a terrible job over the past decade or more. I mean, in the case of tin, there's been no concerted effort to look for tin, primary tin deposits for a long time. And guess what? We don't have any now. Okay, we need tin badly, and the price reflects it. It's now $45,000 a ton. Who would have dreamed that it would be that high? But yeah, now we need to get out, roll up our sleeves, and start looking for these metals. So again, it's supply side. There's chronic issues on the supply side, undercapitalization in all aspects. Finding these minerals and also developing new mines.
I agree with that. And when I look at the precious metals equities, specifically, if you're looking at the 𝙂𝙊𝙇𝙑 or the GDX or GDXJ, those have not followed gold and silver up since 2016. They've been undervalued. And it's just what you said, Quinton, that the money's not coming in to support the exploration of this, and including the base metals as well. So we're seeing these price spikes in the available list of commodities. Crescat Capital, 𝙂𝙊𝙇𝙑 has a chart that is showing one of the great charts when I interviewed him, that is showing the upcoming gold cliff. It's really, he says it starts in 2030. I see it starting in 2027, where the proven and probable reserves literally fall off a cliff. It's a waterfall. And so, yes, we don't have those new reserves. I would argue in silver, we're already there and have been there for a while. According to the Silver Institute, we're at 110 million ounces in deficit this year between what the miners are producing, what the industry is going to use. So at what point do people, what is the crisis point at which people say, hey, this is maybe the most undervalued part of the equity complex? Tech, we know, is overvalued from a P/E ratio perspective. When do you think the big companies and the generalists come back into the commodity sector?
Well, and look, 𝙂𝙑 does have a lot of very good charts. So I'm glad you brought that up. If you look, there really has been, look closely at several of its charts, in particular, charts that do the ratio of I think it's a NASDAQ to commodity index and stuff like that. You can see that there's been a shift, and I'm talking very recently, probably in the past 6 weeks, 8 weeks, 12 weeks, something like that. Back last year, back the previous couple of years, you did not hear anybody talking about commodities. You didn't hear anybody talking about mining, at least maybe for a little tiny window in 2020, right after the pandemic. Wow. Okay. Everybody's throwing their money at, guess what? At tech and other, highly speculative early startup industries and stuff. And they forgot about the basics, about, going out and finding new metals and building new mines. And guess what the flavor is now? You open up the Wall Street Journal or any, mainstream publication, you can see commentary about the need, the urgency to find more oil, more gas, here in the United States. Why? Well, now we got an added urgency because we got to supply gas to Europe. Okay. All of these commodities are now garnering a huge amount of attention, and that pivot, that great rotation, as Kevin and Tavi call it, is here. Okay. We're seeing money starting to come back into this space, into this fund here at Crescat, and we're deploying it. We're doing it very aggressively. Why? Because this is just the beginning. I mean, if anybody thinks that we're well into a bull market in the commodity space, they're absolutely bananas. Okay, this has just begun. It is just starting.
Yeah, one last question I want to ask about the general economy, and specifically with gold and the dollar before we get into Blue Lagoon. It's recently come out, a couple of big things in the news with regard to de-dollarization. So it was a week or so ago that Saudi Arabia is putting together a deal with China to trade oil for yuan instead of dollars. That's big with regard to the petrodollar and the stability of the US dollar and its purchasing power, which I think means we're going to have even more upside pressure on gold specifically. The second was Russia just came out and said, hey, if you want our natural gas, you have to trade it, or you have to buy it in rubles, not dollars. So you're starting to see two other major world economies say, hey, we want to use our currencies to do trade in these critical energy assets, which really for me is just additional nails in the coffin for the current dollar standard and what that'll look like. I can't help but think that this is going to be very positive for gold. What's your opinion?
Look, all fiat currencies are rubbish. Okay, there's no question. Okay, you can talk about yuans and rubles all you want. You can badmouth the dollar. I mean, but basically they're all on the same train track. Okay, they're all headed for devaluation over time. There's no question. One thing Russia's done that's a little different is they actually, have allowed the central bank to start purchasing gold again at a fixed price per ruble, which is interesting. Okay, that's a little bit different flavor here. So in effect, there's a little bit of a link there with gold now. Very, very interesting. Does it bode well for the price of gold? Yes, but I cannot say this enough. Anybody that thinks, oh, well, I can't wait until gold gets to $3,000 an ounce or 5,000, or pick your favorite number, $10,000 an ounce. Hold on. That simply means the dollar has lost value. Okay, it's not like all of a sudden you got $10,000 per ounce and that you're rich. Okay, you have to now buy stuff if you want to use that money that you've gained through investing in gold, physical gold. Then you got to turn it around and purchase stuff. It's like the housing market. It's like, well, hey, my house is worth $1 million now. Well, guess what? If you sold it, you'd have to go out and buy a house for 1.2 million. Fat lot of good that does. Okay, so it's not so much about where the price of gold is going to land in dollars or rubles or yuan or whatever. It's about seeing the true value of gold come back, and I think reestablishing the buying power it has and taking a place as a monetary metal once again, and silver too, by the way. Silver is actually more of a monetary metal in many respects. If you look, silver was the money. I mean, look in the United States, most people's money, back 100 years ago would have been in their pockets in the form of silver.
I agree with you. Now I want to turn to Blue Lagoon, because Blue Lagoon is looking to develop a gold silver project up in British Columbia. Actually, a couple of projects. You have the main one and then another one that you're working on. And first of all, it's in a tier 1 district. It's a great district to do mining, has a lot of historical success in production. And it's close to home. So that, me being in the United States is great, because we're going to need to secure our gold and silver resources, and having, a project close by is always a good thing. Rana, can you tell us a little bit about the project, give us a little bit of an update, and then after that, we'll ask Dr. Hennigh about his opinion as an independent analyst.
Well, actually, if you don't mind, let's turn it around. I know I'm from the company. Of course, I'm going to say, hey, we got the best ever. But here's on the program, and this is my first interview opportunity with the Dr. Hennigh together. So I feel very privileged. We have one of the greatest geological minds of our times. He's very humble, so he won't say it. I'll say it, right? Ask him, why is he involved in Blue Lagoon? And remember, he's an independent. He's with Crescat Capital. He's a strategic advisor to them. Has no association with us other than the fact that he is an investor. So I'd love to hear from him that what does he like about our company so much that he invested in it?
Okay.
Well, okay, all right. Look, I got to give it a little background. I think I did this last time we had an interview, but the opportunity to invest in Blue Lagoon actually came my way a bit earlier than when we chose to invest. Okay, I remember seeing the story. I think late 2020, early 2021, and interesting. They were talking about reestablishing a small mine, going into production, high grade. That did catch my attention. There wasn't a lot of information available on the geology at that time, so it was a little bit challenging to understand exactly what this might be. But fast forward about middle of 2021, came across my desk again, we'll say, through email, and I thought, I had to look at some information they put out. I think there was some information. It was kind of, we'll call it geo-nerdy information that came out in the first half of 2021 that told me, this might be a certain type of deposit. So I thought, I'm going to meet with this company and see what this is about. And we had a call, I think it was July of last year, somewhere thereabouts, and talked about the geology. And Bill Kronk, the geologist running exploration at Blue Lagoon, got on and told me about some of the things they're seeing as far as the mineralogy of the veins. I mean, this sounds very technical, but the minerals that are in the vein, the gold and silver ratio, the other elements that are associated with gold and other things, all of these caught my attention as being potentially analogous to a certain type of gold system that's found occasionally around the planet, called a carbonate base metal gold system, and it's a subset of the alkaline gold systems. Very technical, okay? But in short, what that means is these guys have a bit of a rare beast. There are a few deposits like this around the planet, like Buritica in Colombia and Kilian in Indonesia, and 𝙂𝙊𝙇𝙬 in Australia, and I can ramble off a few other examples. Well, guess what? Those all turned out to be multi-million-ounce gold deposits. And they tend to be high grade. Okay, these are interesting things. I'm going to have to pause here because I got to drink some water. Sorry about this.
While he's pausing, by the way, let me say that it took me about 9 months to get his attention because he kept saying, "Oh, you guys are a small little thing."
Okay, I'll plow into it. Sorry. So anyway, after having this discussion with Bill Kronk about some of the aspects, I was convinced that it truly was an alkaline gold system, and that if they undertook certain exploration, they might be able to find something like a Buritica right here in British Columbia. I mean, wow, can imagine that. Colombia is a bit of a dodgy place to operate, but British Columbia, no problem. Okay, finding a Buritica-like deposit, and when I say Buritica, I mean, a 10+ million ounce gold deposit, very high grade vein system. That would be a great outcome. All right, so Bill actually came to Denver in August, I believe it was. We met and discussed ways to explore this type of system. I showed him some examples from some information I had on other deposits. And I said, I think you might have one of these sheeted veins where there's a lot of veins very closely spaced to one another. And they're deep rooted too. They go down a long ways. I said, you should be bold about how you drill here. So Bill took that information, went off, and he started drilling a target. Look, the initial resource at Dome Mountain is really just one small part of the vein that the historic family, I believe it was, operated here. Okay, so it was just like the tip of the iceberg. Think of it that way. But Bill recognized that nearby there was a structural zone called the Chance Structural Zone, basically a corridor of structure like faults in which it could indeed be possible to find additional veins. All right, and Bill set about drilling some holes in that area. And lo and behold, since the last time I interviewed with you, he's now successfully hit high-grade mineralization in this Chance Structural Zone. Back in January, I believe, late January, the company announced an intercept of 7-point-something meter. I think it was 7.2 meters of nearly half an ounce gold per ton in a brand new vein and at depth too. Okay, so this was not just a fluke. This is a real deal. And there were actually more veins within that drill hole. There were narrower but high grade intervals in that drill hole. So this tells me, wow, they are into a sheeted vein system, just like Buritica. Now, these are early days. Okay, they've got another news release they put out recently. Again, high grade results, narrow veins, but sheeted. There's multiple veins in these drill holes. And they have something like 40 drill holes in the lab right now. Why do they have 40 holes? Because Bill has been seeing stuff. So he's continued drilling in this target area. And based on the visual appearance, the veins that he's intersecting, he's quite encouraged. The company is planning 20,000 meters this year, rightly so. This is how you need to attack a project like this, like aggressive drilling along strike, across the whole structural zone, down to depth. Let's see what's there. If we find their sheeted veins, just like Buritica, this could be a phenomenal outcome.
Explain a little bit about the economics of a project like that from the perspective of, is it lower cost? Is it just very high grade in terms of you're going to be able to put out a lot? Because if I'm an investor, I'm looking at going, okay, what's the earnings potential down the road if I'm going to put my money into it?
Sure.
At the end of the day, it's about the quality of what you're getting out of the ground. And
that's exactly right. Well put. Look, the grade is critical in gold deposits. If you look at the average grade of many gold mining companies, big gold mining companies, you can see that over time, their grades have diminished. Many of them are hovering around 1 gram per ton. Now, that said, most of that is probably open pit mineralization, which is cheaper to mine, and it can still generate decent margins. But when you're talking underground mining, which this would be likely an underground mine, you do need high grades. Okay, the higher grade, the better too. Okay, Buritica, I think at the end of the day, before Continental sold it to the Chinese, I think the resource, if I remember, it was over 10 million ounces at something like 10 grams per ton. Okay, that's very high grade material. That's the kind of thing you're looking for here. And so far, they're starting to see those kind of grades and veins at Dome Mountain. Okay, so what you said is spot on. Big companies, they want projects that have big size. Okay, and Buritica was actually chased after by several major mining companies, including Newmont. All right, but having one in British Columbia with similar grades, that would be phenomenal, because you can make a lot of money mining, even an underground setting. You can make a lot of money mining. It really helps with the bottom line. These major mining companies, they're starting to focus more and more on the quality of the projects that they're pursuing.
And just to add on to that, Robert, we just sent out 5,000 tons to our toll mill partner. And, that was a grading at around 10 grams a ton and generated so far over $1.7 million for us already.
There you go. That's proof, pudding, pudding proof, proof in the pudding, if you will.
And it gives you some cash, Rana, to continue. I mean, it gives the market confidence of what you have, but also gives you some cash to put back into exploration.
Sure, but I think the key is that what you just said, the exploration, right? I mean, we have a nice starter mine. It's we have about 250,000, currently in various categories, indicated and inferred, et cetera. But that's just the beginning, and that's what's exciting about junior exploration companies like ours, is that when you're at the very, very beginning, that's what what you're going to get. The multiples, the many multiples that an investor sees is, as Dr. Hennigh just spoke about, is as you expand that the opportunity from going from one vein to multiple veins, and going from a small little couple 100,000 ounces to potentially multi-millions. That's why I personally, before this, have already got over $2 million. Me and my family, my handful of my friends, have got over $2 million invested in the company already. And in fact, earlier this month, I bought another 100,000 shares in the market, and then my board and my lawyers told me, hey, you got to stop. You can't buy in the market anymore because we're starting to see some results. So I'm under embargo now.
Look, I'm going to pick up where you on your comment there. You do have a 250,000 ounce resource. You've demonstrated the grade with we'll call it a large bulk sample now, 5,000 tons. But here's the thing: if you look at the existing resource and the amount of vertical profile it has, you have over 1,000 ounces per vertical meter right now. Now, this is going to sound a bit technical, but just stick with me. It goes back to your question about costs and margins and profitability of something like this. Okay, now in an underground mine, general rule of thumb that many geologists use is that you need 1,000 ounces per vertical meter to justify the costs and capital needed to go into that mine to develop it. Okay, so right now, with just the one vein that Blue Lagoon has, they can already see there's likely a profitable vein there. Now, this is where it gets interesting. That vein is wide open to depth. So I think you know, in these types of systems, you can pretty much assume that you're going to see a continuation of that pattern. You know, in other words, the ounces per vertical meter, there you go. The ounces per vertical meter should continue with depth. But look at it along strike. There you have, it's wide open, okay? They can expand this vein. But now imagine for a second, you've got maybe 4 or 5 or 6 more veins that are parallel to this. Okay, all of a sudden, you have a real big story. You know, like if you had another 4 or 5 veins parallel to this, you might see, say, 5,000 ounces per vertical meter. And that makes a very profitable mine. Why? Because when you put the infrastructure in to develop those veins, you're already down to that level. That's where the cost comes in. So it's simply a matter of drifting along those veins to open them up and exploit them. Okay, this makes for a great story. Buritica is making gold very profitably right now. Other mines of this type, you know, Porgera in New Guinea, has made a fortune for the companies that have owned it over time. So these are kind of in that upper echelon of, you know, potentially profitable mines.
Just to clarify on something you said earlier, you're talking about having multiple veins that could go down to depth, you know, which would allow it basically is like a multiple of your original economics. Did you call that sheeting again, or what was the term for that, where you have those
Yeah,
lined up?
sheeting is simply when you get you know, very flat, predictable, or not flat like this, but sheet like, vertical sheet like of veins, and often, you know, parallel to one another. So basically like a bunch of sheets hanging on a clothesline. Think of it that way.
So Rana, is that your plan in terms of your drilling? You're doing a lot of meters of drilling this year. Are you trying to identify those sheets that Dr. Hennigh is talking about?
Yeah, exactly. That's a big part of it. You know, we announced a 20,000 meter drill program here earlier that you know, that we started in January. So you know, with Dr. Hennigh's help and with Bill and our technical team, you know, we are you know, since we've been talking with Dr. Hennigh since last year, we've already had 2 new discoveries. You know, so we've really advanced this project significantly, you know, in the last few months. So that's our strategy, and yeah, we're you know, all hands on deck here. This is going to be a very busy and very important and a game-changing year for our company.
Good to know. As we wrap up the interview, where can investors find the stocks if they want to trade? I know you trade in Canada, you trade in the US, and I believe you trade over in Europe as well, right?
Yeah, that's correct. Yeah, the best place is our website, www.bluelagoonresources.com. We trade in Canada under the symbol BLLG, and in the US under the symbol BLAGF.
Okay. Perfect. Thank you guys so much for joining the program. Good to get an update on this. I know that we looked at Blue Lagoon before. You guys have made a ton of progress. And Dr. Hennigh, thanks for popping on and providing not only your knowledge of geology, but also your independent assessment of the project and the potential for it, really explaining that. I think that's big news for investors, that you know, the project economics could get much better. Even, you know, they look pretty good right now. So appreciate both of you for joining, and we'll talk to you again soon.
Thank you.
Thanks.
Hey everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. Also wanted to remind you, you can find us on goldsilverpros.com. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or ARC Silver and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.